Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Today, you guessed it, we're going to be talking about the cryptocurrency market, and this is going to be your daily cryptocurrency market update. And we've got a lot to cover, guys, so strap in. Before I start the video, if you guys can do me a massive favor, drop me a like and a comment. It really does help me out with the algorithm and help promote this content to a broader audience, which I think is very much needed. So, what are we going to be talking about today? Well, we've already somewhat said we're going to be looking at the Bitcoin CME futures. We're going to be coupling this up with our own technical inverse head and shoulders and this kind of third wave that I think we're on, because to me, it very much like Bitcoin is destined for 35K. Now, there's going to be a little bit of resistance on the way there, but, you know, for people that were calling long from a spot point of view, not leverage, I do not think this is the kind of market that you want to be leveraged in. We are going to see that certainly going into Wednesday with the FOMC or the rate decision. It's not really the time for leverage. But, you know, we've come a hell of a long way from sort of 15, 16K to where we are. And I think the CME gap that we have here is likely to get filled. Maybe there's a slight sort of retracement before we then load up and try and take that CME gap out at around about 35K, which also happens to be our head and shoulders target. So we will look at this. I also want to talk about Bitcoin dominance. I did a whole video I no longer have yesterday, where I looked at how Bitcoin typically leads the move, and actually this is a very positive sign, and what to look for if you want alt season. You need to just wait for Bitcoin dominance to go down with the total market cap going up. Overlay those two charts. When you see that uncorrelation, right now total market cap's going up and Bitcoin dominance is. When you see the total market go up and Bitcoin dominance not, that's when your alt season is on. So watch out for that. I'll try and find that tweet and maybe repost it. But really, I think it's very important with everything going on to cover the sort of broader financial landscape and relate it to the cryptocurrency market, because Bitcoin right now is very relatable in regards to it was built to combat a what's a nice or not so nice but sort of correct word to use here, to combat a failing, I guess, banking system, you know, a kind of not up to scratch banking system. So we're going to play this clip from Caitlin Long. They mentioned Bilagi's tweet, and I actually think Bilagi's on the money. I just think he's very, very early, or not very early. I just don't think putting a 90-day time period on it. I think that's very much advertisement. He's going to get very popular off of that, even though there's not a high likelihood that that does indeed take place, unless you literally saw all banks get wiped out. Then maybe you could argue the case, but you're talking about a $1 million price in USDT, and if that did happen, US dollars would be largely worthless. So we'll talk about the balance sheets. This is a form of stimulus, and we did say this, and the fact that this is likely set to continue. And actually, the main thing here is, well, how's this driving? You know, to sort of simplify everything again, how is this driving everything? Well, rates going up is bad for markets because it's bad for liquidity. And now we're seeing markets being forward-looking, a kind of reversion of that. And we've looked at this with the 2-year yields and all this stuff, but I want to do stuff slightly different. So let's cover the sort of broader picture, guys. We're going to be looking at a number of things, also going and taking a look at Michael Burry. Yesterday, we had First Bank falls 26% to all-time lows. I think they were something like 60% down. Some comments from Jamie Dimon leads efforts for new First Republic rescue plan. So there's contagion within the banking sector. What Michael Burry is essentially saying here, and he showed this chart, is that actually he doesn't see a reason for fear, because if you look at Silicon Valley Bank, you know, they were very out there in terms of risky, and other banks aren't quite exposed to that and actually have a lot of hedging against the bond market going down, and they're all stuffed full of bonds. You know, most banks hedge against that kind of thing. Silicon Valley Bank, to my understanding, was not hedged, even though they were a big player. Starting off with this clip from Caitlin Long, and then we'll get into it all, guys. Let's go ahead and play the clip.
Caitlin, welcome.
Thanks. Good to be back, Kelly.
Are you as bullish as Balaji Srinivasan, who thinks hyperinflation takes Bitcoin's price to $1 million in 90 days' time?
Well, I wouldn't make a price prediction like that, but it is clear that a lot more folks are waking up to the instability of the traditional financial system and being orange-pilled, so to speak, looking at Bitcoin for the first time.
So why do you think it's taken this recent leg higher? What do you think is driving that?
Well, it's a couple of things. There are some technicals where stablecoins have lost their banking access due to Operation Choke Point 2.0, the failure of a couple of banks, and the debanking that is taking place among bank regulators coming out of Washington, D.C., pressuring banks not to bank this industry. And as a result, the selling of stablecoins going back to Bitcoin as the core asset in this industry has created some buying pressure. But then also, it is an insurance policy. It is a scarce asset, just like other types of scarce assets that are insurance policies against financial system instability.
And that's really the root of it, guys. There are a number of variables to why Bitcoin's price is doing what it's doing. Actually, before all of this, we were looking at down at your sort of 15K range back at the start of the year, putting money into the markets again. And that was before we had all this instability news and everything. So there's a number of things that kind of set Bitcoin up. And what's really fueled it is Silicon Valley Bank and the Fed's response. We had that emergency response in regards to the dollar swap markets, providing liquidity to it. From all the central banks, which was coordinated. We looked yesterday, actually, you had this in 2007 before everything went kaput. But, it's very interesting. From February onwards, we had implied rates, tighter conditions going up, and being implied a lot higher. Then with Silicon Valley Bank, we had boom. And markets, when from February it went, the implied rates went like this, markets went like this. No. So implied rates went like this, markets went like this. So they came down when rates were going up. Now we have the adverse of that. We have got rates coming down, given obviously Silicon Valley Bank, and markets are going up and actually pricing cuts out. And we've looked at this. We said we want this kind of pause period before we see the Fed pivot, because usually if the Fed pivots on bad news. This was interesting. So this is balance sheet. These loans were newly printed money or forms of quantitative easing. They increased the Fed's balance sheet to 300 billion, or they increased the Fed's balance sheet by 300 billion. In other words, it's just 1 week. The Fed reversed roughly half of its quantitative tightening it accomplished over the past year. So you can see this is significant. And that's why markets are loving this, because this is newly printed money. This is liquidity. If you look at M2, you look at all these things, you can see an increase in it, the Fed's balance sheet. This is from Danielle D. Martini Booth, who I think is fantastic, guys. Please go and give her a follow. The Market Sniper was the one that put me on to Danielle, but she's very much well worth a follow. So lender of next to last resort headline alert. Federal home loan banking system is issuing $304 billion in debt last week, according to the person familiar with the matter, who asked not to be identified, discussing non-public data. That's almost double the $165 billion that liquidity-hungry lenders tapped from the Federal Reserve. That the FHLBs are a depression era backstop originally created to boost mortgage lending. The system, now a key source of cash for regional banks, is known as a lender of next to last resort, a play on the name for the Federal Reserve's discount window. So it's very interesting. It's contradictory, the environment, to say the least, because we've still got quantitative tightening. They're set to do another interest rate increase on Wednesday. 25 is what the market's looking for. I wouldn't be surprised if they do a 0 and we have this pause period. And actually, to move away from this, if you want to go and watch my video on altcoins, it's well worth doing so. But if you look at the Fed rate, you want to see, and we've been drawing this kind of a period take place, because markets do well in this kind of a period, right? They don't do too well in a period where rates are dropping, because usually the reason rates are dropping is because, if you look at where they sort of topped out, markets have this little leg here. Usually when rates are dropping, it's because something serious has happened. So I think they'll do something like this. Pause. It will get, all this news will kind of get quietened down. This is Michael Burry saying actually it's already blown out of proportion. He spoke actually last week about how JP Morgan made a pivot 3 weeks after the market bottomed, and he's saying a pivot was made last week. This is really what we're looking for. Now to talk about the CME gap and go to and do a little bit of Bitcoin technicals. I think I've covered everything broadly. Of course, we had another bank, more contagion. This was interesting and this was from Michael Brown. This was a City AM newspaper headline, and you can see you've got Bailey there, the head of the Bank of England, dressed in a wartime, World War II time suit, Very interesting what's going on. And this is again, I think if this kind of contagion for banks stops, or they quieten it down, you get no more increase and actually continued support to the markets from the Fed. Markets are going to do, or Bitcoin and risk is going to do rather well. Now, you guys know what we've been looking at, just to round up on some TA for the people that are interested, and then we'll leave you to your Tuesdays. You know, this is what we're looking at, right? This has got you a target at around about 35k. You can come do it for yourself. Don't use your log for your target, or don't use your log for your target. We'll do it now, actually. This is just pretty rough, not going to the actual to the cent here, but you've got a target of around about 35k, right? We've said that actually it's very likely you're in this kind of a structure now for Bitcoin. This is your one wave. This is your third wave, which is going to be bigger than your one wave and likely take you up here. And then you're going to do something like this. Let me get rid of my face, guys. Now, funnily enough, and actually you are running into a bit of headway here. Why are you running into headway here? Well, because you do have a bit of volume ahead of you. Okay, so we did say you would retrace these very low volume areas sharply. And I think once you've got through here, it's a matter of time before you come and attack this. And you can see actually once you get through this, it's likely you're going to get a push through it. But there is actually a CME gap. And again, with Elliott wave theory, typically your third wave is your largest wave. If this was a wave of, let's just take a quick one, 53%, you know, 53% gets you to 30k. And I think actually you stand a bloody good chance with all the sort of background noise of going above and beyond that. Now, it's very interesting. So anybody that's traded the futures market will know that these gaps occur because obviously you have daily closes. You know, the markets don't trade 24 hours or even perhaps like daily, you can have these gaps occur. But on the weekly, typically your gaps get filled, right? So you've got another gap here from 34k. Okay. To be specific, especially if you have a hard close like that, right? So you did have a gap here. You've got a gap here that got filled beautifully. These gaps do, funnily enough, get filled pretty often. You don't really have a gap here. Maybe a slight one. So there is the possibility that you do something like this on the way up. Where is my draw tool? Am I losing the plot here today, guys? It's likely in the cryptocurrency market at the moment. You know, you could do something like this. Which actually, you know, what would this look like? You know, you're running into this area of price action here. I think you're going to fill this CME gap. Very coincidentally, and you'll often find that with technical analysis, it does become very coincidental. You've actually got your 35k stop there, or your 35k target, and you know, we're looking at 30k plus just based on the third wave. So the number of things that add up. This is all dependent on the macro. Remember, you have got the rate decision on Wednesday. Zero markets will like 25 basis points. They might have a bit of a kind of false start moment, maybe, and then kind of pick the feet up a little bit later on. So we'll see what's happening. That's really all I've got for you guys. Quite a comprehensive one, lots going on. You know, we've tried to cover the macro. We've tried to cover Bitcoin specifically. You know, altcoins, I think, are very much on this kind of journey. Just looking at Polkadot quickly, you know, Polkadot I'm a massive fan of. And I think that ultimately, you know, this is the route that we're going to take. So that's all I've got for you in this video, guys. If you've enjoyed the content, a like is always appreciated. So is a comment. And I'll catch you all in the next one. Anyone that wants to join my Patreon, link in the description. See you in the next, guys.